Hi everyone, Donna here with Bookkeeping Made Simple. And yesterday we talked about sole proprietorships. Today we're going to talk about partnerships, another business entity type. And we're going to talk about the types of partnerships that are available. And before I dive into that, please feel free to like, share, and subscribe. If you find anything useful, helpful, entertaining, excuse me, my voice is not happy today, so sorry about that. Yeah, I don't advertise. I don't really do very much to promote the blog or the video channel. And that is because I'm really just kind of putting the information out there and hoping that it's useful. These are things that I have learned over many years of being in the accounting field and in the course of earning my MBA. So happy to share it with you. So today we're going to talk about partnerships. There are a couple of partnership types, and one of them we will cover when I talk about LLCs. Every business entity type has its own benefits and drawbacks, and you do have to think about those as you're determining what kind of business you want to set up. Partnerships are very similar to sole proprietorships. It is basically two or more people say, let's go into business, and they go into business. Basically, you do not have to have a partnership agreement written up to go into a partnership. However, as an accounting professional and as someone who works with a lot of attorneys, I can tell you that is a horrible idea. It really is critical. Anytime there's more than one person involved in a business, it becomes even more critical to have everything in writing. And that is simply because you do not want to end up with the he said, she said type of a problem when it comes to your business. You want to make sure that everybody on board knows what's going on. I am personally huge about that. It's because I have just seen so many times and experienced where I thought a situation was one thing and I trusted a partner, and it turned out it wasn't the situation I thought it was at all. So you don't want to ever get in that situation. Have everything in writing. And the best thing, particularly with a partnership, decide who's going to be in charge, who's going to make the day-to-day decisions, what percentage of the business is each partner going to have. Usually that's worked out by what percentage of capital they've invested. Sometimes the person in charge is the one with the least amount of capital or has all sweat equity into it because they're the most qualified to be in charge. That is a common misconception that, well, if you own 51% of the business and you get to make the decisions, and sometimes that is the worst possible thing you can do. You really want to make sure that you are choosing the person who's going to make these day-to-day decisions on behalf of the partnership, who has integrity, who is qualified to do that, has a good grasp of business administration. So it's not necessarily the person with the biggest chunk of the business. Usually percentages of business ownership is determined by who puts in how much capital. So if you have $100,000 that you need to start your business and one person puts in $58,000 and the other one puts in $42,000, well then, those are the percentages that you're going to own. It gets more complicated the more partners are involved. A general partnership does not require a partnership agreement. I just said that. But we do want to make sure that everything is in writing and that you do have one in place. Tax returns, partnership tax returns are filed on the Form 1065, the partnership tax return. This notifies the IRS of how much each partner has made in the business. That is where these percentages of ownership really do come into play. So if one partner owns 58% of the business, then they get to claim 58% of the income. And the remaining partners, claim their appropriate percentages. It's usually excuse me, those individual percentages and shares of the business and business expenses, shares of the net profit, let me put it that way. So when we file a Form 1065, what we're doing is we're telling the IRS the business as a whole made this much, the business incurred this much in debt, this much in expenses. This is what's left over. It has to be split between the partners, and this is the split. And that's really what we're reporting to the IRS. So that is then each partner is given what's called a Form K-1, and that is what they use to prepare their individual taxes. This is a flow-through entity that I've talked about before. The income flows through the business and to the individuals. And then the income is claimed on the tax return, the individual tax return. Let me make that clearer. The biggest drawback to a general partnership, again, goes to liability. It is very much like a sole proprietorship, except there's more than one person involved. That does mean that every partner in the firm is responsible for every debt of the partnership. So if you have one rogue partner that's going out and running up debts in the partnership's name, then the entire partnership, every partner individually can be held responsible for that. And I have seen that happen. So also, if a partner leaves the business for any reason, the partnership is dissolved. And this means that you cannot pass this on to your heirs. Your exit plan cannot be, I'm going to pass it to my heirs in my will. It cannot be, I'm going to sell the business. Those things cannot happen in a general partnership. There are ways of changing the business entity to such, in such a manner to be able to do that. But a general partnership is dissolved when one partner leaves. You know, and even if it's 25 partners, if you have 25 partners and one leaves, that partnership is dissolved and you have to basically redo it. A new partnership can be formed with the remaining partners, but it's not the same as the original partnership. If you want to form a partnership, but you are concerned about liability issues, yes, there are huge ones with partnerships, give us a call. Our number is 801-692-0032. If we can't answer your questions, and a lot of times we can't, if we can't answer your questions, we will put you in touch with some fantastic business attorneys who will be able to answer your questions. And let me assure you, my philosophy on business is that I do not want to conduct business in a way that I would not want to be treated, if that makes sense. I run my business the way I myself want to be treated. So, and one of those things is, if it's not a win-win, it's a no-go. So if I'm going to refer you to an attorney, I've worked with that attorney, I know that attorney, and I can tell you firsthand that they're good. I don't refer people to just some name in the phone book. It's to attorneys that I've worked with, that my other clients worked with, that I think are really, really good. And otherwise, I wouldn't refer them. So the ones that we work with are top-notch. They are the best. And if you need help drafting a partnership agreement or finding out what business entity is the most appropriate for your business, give us a call. We'll put you in touch with the right people. Thanks so much. I will talk to you soon.